Hey, it's Tim Thompson from RevThink. It's good to see you. And this is Joel.
How you doing, everyone? I'm Joel, and welcome to the PPP Forgiveness webinar. If you missed this, we decided to create this replay for you to help you go through this calculator. I'm also joined by Jason Fletcher here. Jason, please say hello.
Hey guys, welcome. This is Jason Fletcher from RevThink.
If you like what you see here, we actually have two links you can follow. One below that will show you the webinar where we walk through how to use this spreadsheet. We also have a link below if we can help you with any one-on-one engagements or questions you have. Feel free to reach out to us. Thank you for enjoying this calculator. We took some time to walk through this PPP forgiveness process and to get you started on the journey is going to be great for all of us. So the more proactive we can be, the more we will be ready to kind of navigate this terrain. I started this company 12 years ago, and soon afterward, this guy, Jason Fletcher, joined me. He's my longest running cohort here in this process. Jason, welcome yourself and introduce yourself and tell them about that first desk that we made at Pacific.
Yeah. So yeah, I just really quick, I was at a fundraiser and just getting ready to leave, and I bumped into Tim several times over the years and light acquaintances, and he said, "Hey, what do you do?" And I was like, "I work at a job." And he said, "Well, you should come do what I do." And I said, "What do you do? What do you do?" And he said, "Well, I'm busy and I'm about to get really busy. Let's have lunch." And that's how it got started. And so when we got started, we actually set up our office in Steve Miller of Steve Miller's band, his old house here in Oregon. And we just basically, we got a couple of doors and some sawhorses and just sat down and started inventing stuff to help the people that were with us. So it's been a fun ride. And I have been so blessed to be a part of so many great companies with Tim and through RevThink. So,
well, with that, I'm going to say this: Steve Miller. I mean, both of your guys' cool factor just went up a whole notch, right? But we have business to attend to today, and I do want to get right into it because we're going to try and keep our format here today to an hour or less, including Q&A time. So, as you have questions, which I know you will, please jot them down, drop them in the chat. I'll be monitoring the chat as your MC of sorts, because it's really going to be the Tim and Jason show today. Also, let me give you a heads up before we even start. I'm going to show you a URL.
Great way. This is such a unique time. There's a lot of confusing things happening. And we just want to make ourselves available. We took some time to walk through this PPP forgiveness process and to get you started on the journey is going to be great for all of us. So the more proactive we can be, the more we will be ready to kind of navigate this terrain. I started this company 12 years ago, and soon afterward, this guy, Jason Fletcher, joined me. He's my longest running cohort here in this process. Jason, welcome yourself and introduce yourself and tell them about that first desk that we made at Pacific.
Yeah. So yeah, I just really quick, I was at a fundraiser and just getting ready to leave, and I bumped into Tim several times over the years and light acquaintances, and he said, "Hey, what do you do?" And I was like, "I work at a job." And he said, "Well, you should come do what I do." And I said, what do you do? What do you do? And he said, "Well, I'm busy and I'm about to get really busy. Let's have lunch." And that's how it got started. And so when we got started, we actually set up our office in Steve Miller of Steve Miller's band, his old house here in Oregon. And we just basically, we got a couple of doors and some sawhorses and just sat down and started inventing stuff to help the people that were with us. So it's been a fun ride. And I have been so blessed to be a part of so many great companies with Tim and through RevThink. So,
well, with that, I'm going to say this: Steve Miller. I mean, both of your guys' cool factor just went up a whole notch, right? But we have business to attend to today, and I do want to get right into it because we're going to try and keep our format here today to an hour or less, including Q&A time. So as you have questions, which I know you will, please jot them down, drop them in the chat. I'll be monitoring the chat as your MC of sorts, because it's really going to be the Tim and Jason show today. Also, let me give you a heads up before we even start. I'm going to show you a URL. I'm going to share my screen. As we go through this, there's going to be a lot of complexity. And if you're like me, you're probably already thinking, there's no way I can learn all this and get all this down in this webinar. So what next? And I just want to let you know, we'll give you a replay link to the webinar. We have this link here. If you go to refthink.com/PPP Forgiveness, what that does is it gives you a sense of what's available to you beyond this. Because if you said, hey, Joel, that was great, but I need more help actually walking through this process, filling out my application, or I need like the bigger picture called, how does this plug into my financial strategy of my creative firm? We've got this landing page here, and we do have some options that we'll offer at the end if you want to go deeper and engage us to help you through the process. So I just want to let you know that that's going to be made available to you before we get started, because we got a lot of ground to cover. Now, what ground are we going to cover? Let me share my screen again, and I will show you. Here is our overview. This is what we're going to cover today. We're going to be going through coverage period. What is that? Okay, for your forgiveness application. Payroll calculations for forgiveness. We're going to also cover this topic of full-time employee calculations to make sure you qualify. And then there's this qualifying expense calculation during the selected covered period. Now, if you're like me, man, about half of that makes sense. Like, I kind of understand about half of that. So no pressure, Tim and Jason. You're going to walk us through this and give us the big picture and help us know what all this means and what to do with it. And then lastly, before I hand off to you guys, if you didn't download and make a copy of our PPP Forgiveness Calculator, please do that. And I will post a link here in just a second, because I got to chase it down, and I'll post it right here in the Zoom chat. So that calculator, you want to make a copy of that right now, so that as we go through this, you're going to see what Tim and Jason, as they drop information and numbers into it, and how it all works, its crazy calculations and formulas and so forth. So I'll post that here in a second for you, Tim and Jason, so everyone has a copy of that. Oh, yay, Tim already posted it. Thank you, Tim.
Bingo.
Okay.
I knew where it was.
All right, so Tim, I think I've got everybody ready to go now. So I'm going to pass it off to you and Jason. So please take it away.
Yeah, thanks. And please do download that link. It's a Google Sheet. When you land on the page, it's going to ask you to make a copy immediately. That will be your private copy. You can put your own financials in there. It won't be shared with anyone else. So make sure you do that to get things started. It's going to help us navigate through this conversation. The reason why I want to have this conversation is a few weeks ago, I was working with a client, and I'd realized that this client didn't know when their PPP period was going to come to an end. And therefore, they had employees that they were retaining during the PPP period, the coverage period. And when that was coming to an end, they knew they needed to downsize the company to kind of get things in order. They'd retained them for that period, but it wasn't going to be a long period beyond that. So at that point, trying to gather enough information so that we can run these calculations was almost insane. The spreadsheets that are available on the internet, the lack of information that was available to us, it was very frustrating for me. And I thought to myself, if it's frustrating for me, it's probably frustrating for you. But here's what I want the takeaway to be. We're going to prepare you to think about the forgiveness application. You really have a few more months before that timeline has come. The real deadline is making the decisions with your business now. So I want to know you to know that you have qualified or you are qualified now for forgiveness, and therefore you can get back to work and start managing the business you need to. If the PPP loan gave your company a little bit of a boost, you want to retain that boost and you don't want to burn through it for no possible gain. So that's what we're looking for now. We want a strategic opportunity for you to take advantage of the PPP, let it do what it was supposed to do, which is give you a boost. It's an economic boost package the government put out there, and we want it to work in your favor. So this forgiveness process and what we're walking through with our calculator today is to give you insight to make sure you qualify and then begin the process of making those strategic decisions. So that's the reason why we did it. Jason is just like me. He sits on phone calls week after week with some of these clients, and we're constantly wondering and asking these questions. So I'm going to punt to you every once in a while, Jason, too, when it comes to questions. Sure. I haven't done the research for myself.
And I'll just add,
okay, great.
Let me just add this real quick, Tim, to anyone that has, when you get this calculator, download the link and access it. Here's what you should be looking at. Okay, I'll just give everyone a quick glimpse. There's a lot going on here, but if you look at these tabs at the bottom, you'll see there's instructions, there are these key inputs, and then of course we'll go through 2 and 3 and 4. But I just want to give everyone at least a quick glimpse of, or a peek, Tim, at the calculator, so that when they open it, they know they're looking at the right thing.
Yeah, that's great. Thank you. Okay, so let's start off with some good questions. The first question we need to understand is, how should we decide what our covered period is for PPP forgiveness? And just for clarity, the covered period is the period, it's either 8 weeks or 24 weeks, or even a variable of 24 weeks that you will report your expenses within for your application. You'll see as we run through this calculator that there are some people that receive their PPP funds later than others, and they might not have an entire 24 weeks to finish that pay period or the application period. They're going to have a truncated version because they received it later. But the deadline is December 31st, 2020, no matter what. So if all you had is 16 weeks between the time you received it and that deadline, that's your covered period. But for most of us, it's going to be 8 weeks or 24 weeks because you were part of that daily briefing exercises that we did, and you were one of the first people to receive the PPP. So we're going to go with that as the assumption of what the covered period is. And we want to understand, how should we decide the covered period? So I'm going to go over here to the spreadsheet that Joel just showed you. And again, just to start off, there are some instructions here, just so you know what each of the steps are. It's important that you follow these calculations tab by tab because they build on one another to get to the final calculation at the end. And in this first tab here is where we're going to start deciding or looking through how to look at the pay covered period. But to begin with, what we really need is just some of the very basics for your company. And I'll fill this in as we go along so you can see how to do it. But the first thing we really need is your loan amount. So we'll plug that in as $100,000 for a loan amount for this company. There's no interest that many of us have accrued to date, or maybe none of us have. But if you have, that's going to play into the long-term calculation if it's there. And some of us received an EIDL grant. The EIDL grant was a separate SBA loan that you received. And when you applied for it, you got an advance, so an early advance, and then you probably got an application to receive the rest of the loan that you qualified for. If you received the loan or not, and you still have this advance, that advance needs to be paid back through the PPP. So that was one of the requirements of getting that advance and PPP, is the PPP money is going to pay that back. So we need to know what that grant advance is so we can plug that in here. The loan disbursement date is actually the date that you received the funds. So the scenario I'm going to run, these people received the funds on April 18th. You can see right then, as soon as I plug in April 18th, I ran some calculations behind the scenes to give you some precedent of what that would mean for you and some other items you should look at because of that pay period. This is just basically the fine print of what's available to you. And one of those fine print areas is actually this beginning of the first payroll period for disbursement. We actually broke this out so that you understand what this is. After you received your disbursement, following that, the next pay period, or the first day of that pay period, you could choose that as a start date for the loan instead of the day you received your funds. That little offset is very convenient for us. That way you can do 8 straight weeks within the Ppp period and not have to do like 3 days of a previous pay period and cut out 3 days of the next pay period. It allows us to kind of shift it a little bit. So the calculations I built in here allow us to also put that date in there that's offset slightly for it. So these people received their payment on April 18th, and their first, April 18th, and their actual first pay period, I think it was the 21st, April 21st. So that will be what that first information we need is, and the possibility. When you fill this out, this pull-down menu gives you the choice of 8 or 24 weeks. So right now, I'm going to recommend everybody run it for 8 weeks, because if you qualify in 8 weeks, that's the strategy you want to go with. But if you didn't qualify with 8 weeks for one reason or another, and you want to try 24 weeks, you can simply just change this trigger. The covered period changes throughout the entire rest of the calculator, and the other items you need to look at also adjust with it. I just want you to notice one thing here too. If you did receive your disbursement on later on in the year, so 8/10, I'll just make this 8/10 as well. You'll notice that your choices here are no longer 24, it's actually 20, because there's only 20 weeks left in the year. So this second variable here on this pull down menu will adjust for people that did receive it later. I just want you to notice that. Again, most of us will not be dealing with that. We're going to be looking at something early on in April or May, and we're going to be able to choose between the two, 8 or 24. So again, let's just choose 8 weeks to keep things going. Jason, I know when it came to one of your clients, they basically were looking at a 24-week need because they had a really slow cycle and they could fit more of the variables into it. Can you just give us a brief understanding of what the benefit might be of looking at 24 weeks over 8 weeks before we move on?
Yeah, for sure. So I had a client that was dealing with, essentially they had a light payroll. They qualified for more funds because of what they did in 2019 in the first, the qualifying period for the application. So we were able to spread out their payroll over the 24-week period so that they can maximize that forgiveness. Sometimes that's difficult because you have to meet the headcount requirement. But in this case, we based our payroll on the 2019 payroll for the company, but our headcount was really low. So we didn't have to do much in order to maximize that forgiveness. So it's a really, in the lower threshold, I haven't had too many clients that are dealing with not being able to spend the money on payroll, but the lower threshold, the reduction from 75% to 60 is also a really key thing for probably a few.
Yeah, I know that many people, we were dealing with some layoffs early on because we didn't know what the situation was going to be. We got PPP money, so we brought people back on. So there's a lot of like riding the tidal wave back and forth. What this calculation should be able to do is give you some flexibility. Sorry about that. Flexibility within your application to understand what the possibilities are. The 24-week extension is very handy if you need that, and that helps you play things out in the same scenario Jason played out. That's a great example. Thanks, Jay.
Yeah, you bet.
So let's go to question number 2. Does your payroll period meet the forgiveness requirements? So we're going to need to walk through some payroll scenarios that you have played out within the coverage period, as well as be able to compare them to the period that you had used to apply for the PPP funding. So this next tab here, the Payroll Qualifier, allows us to do that. Now for clarity, what we believe is going to happen is that there's going to be a comparison from previous quarter. So whatever quarter you received your funding, the quarter before that is going to be the benchmark for your company. And then the 8-week coverage period is going to be run in comparison to that when it's doing the averages or the employee and the salary requirements. So we built the spreadsheet in order to capture those kind of variables. This sheet might look overwhelming because there's a lot of tabs here, but I actually built the sheet so it can follow the logic you plug names into it. So I'll show you how it works. Again, I've put the information here at the top so that you know what you're looking for. And on this sheet too, I added a couple other KPIs that I thought are interesting as you fill it out. One of them is what your weekly payroll average dollar amount is in comparison to the coverage period weekly payroll. Just something that you want to look at. So I put it up here as a reminder for you as well. But I'm going to add a couple of names in here just so that you can kind of see how this works. So let's start with Jason. And one of the qualifiers within the PPP is if they're an owner or not. It changes how we calculate them. So I simply just put a checkbox here if the person's an owner. That's all you need to do. The next tab is if they're salary or hourly. Most of the people we have are salary. And then this question is what were the gross wages during quarter one? Now, again, this calculator is saying quarter one because this person has the payroll time during April 24th. So the previous quarter was quarter one. If you got your funding in July, this is going to ask for quarter two. And obviously, if you get your funding later, it's going to ask for later quarters. So I put in formulas so it can adjust quarter by quarter. It actually gives you the dates you need to pull your payroll reports as well. And it feeds it out right here for you. It's all in a calculation. You can easily do it. So during the quarter, the 3-month quarter that in quarter one, this Jason person made $24,000. What we need to do is find out what the average weekly amount is. Well, in quarter one of 2020, there was actually 13 weeks, not 12 in quarter one. So I've auto-calculated that for you so that you would know that that 13 variable. If it isn't quarter one and it is quarter two, it will go down to 12. So don't be worried about that. But in that 13-week period, they earned $24,000. They are not an hourly person. So this cell is grayed out because it's not something you would fill out. As a matter of fact, if you try to fill it out, it's going to send you a hate mail and say, don't fill it out. It's only for hourly people. So you can avoid that if their person's salary, and it gives us now an average of what that person's annual salary would be based on the calculation that's there. That's the first place we need to start looking at quarter one. Now we're going to look at our coverage period. During that same coverage period, this person made the maximum of $14,769 during that coverage period. Again, they're not hourly, so you can see their average salary here is $95,099, almost nearly the same as the average during Q1. Nice job. I actually even have this little scorecard here saying it's 100% of quarterly one, so you can see the percentage on a person-by-person basis. There are a few people when it comes to qualifying, and I'm not going to get into the nitty-gritty. This is why we did those kind of special deals to get us on the horn and ask this question. But there are a few people that if they qualified at over $100,000 a year in 2019, that they're exempt from certain calculations later on for the full-time employment qualifier. If that person is exempt, we just hit the exempt checkbox there, and it carries forward through our calculator. So again, we can look into that. We're not going to get into that nitty gritty today, but that function is there for those people who are qualified. And you can always look at the SBA loan when you're looking at that and answering questions. That's going to be one of the items that are there. So that's how you fill out this page. What we really need to do is kind of like have multiple people filled out here so we can see how this thing plays out for us. So Jason and I just kind of took the luxury of putting some people in here so we can get a sense of what that would do for us. you'll see that there are people that are coming in here. They're going to be on an hourly basis. If you want to see how that plays out, you can see that if someone's on an hourly basis, their gross wages might be a certain dollar amount, but their average, based on how many hours a week the person worked, it becomes an average by the hour. The same would work over here. So 40 hours in a week, same average, keep things going. That's how that calculation works if they're hourly wage person. But that's how to fill out this page, and that begins the idea of qualifying. Have you qualified already using on the dollar side? This isn't the full-time employee account, but this is on the dollar side. You can see the scenario I gave you. This person is 100% of quarter one, so all of the money they spend on payroll does qualify. And you can even see here that the average payroll period for quarter one was 12,000, and we filled it out so the average payroll average here is 21,000. So they, in this person's scenario, they're more than qualified to do it. I'm going to just take a moment to breathe and see if there are any questions, because that went really fast, but I believe that the application itself that we built kind of answers a lot of questions. Just make sure we're on to something.
Did you see the question from Scott here? Does wages include K1 distribution? Is that something you might want to touch on real quick?
I know the answer to that. Jay, do you want to answer that, or do you want me to?
The answer is no, it does not. So those wages are really specific to W-2 wages.
That's exactly right. Yeah, the way the government handed out this money was to put you onto payroll, so W-2, so that they can get income tax back from you. So any other thing that you do as a business owner to avoid that income tax and distributions or whatever, it's not going to qualify under this umbrella. That's a good question, though. Thanks, Scott. For asking.
Joseph Wilson also, he posted a question, or Josh, excuse me, Wilson said, is it possible to get additional funds through my original PPP loan or through a new PPP loan? And the answer to that question, Josh, is not yet. It's might happen, but at this point, the answer is no. So we'll have to see what the fourth or whatever 5th or 10th round of stimulus that might be coming lies in store for us. But at the moment, it's no.
Yeah, I can see a couple of these other questions. I think we're gonna get to some of these answers in the next tab. So we'll hold on to those. And if we don't, we will have a Q&A at the end to answer more questions for you. So hold on to those questions. We'll keep them right here in the chat and be able to answer them as well. All right, let's see what we're gonna do next, right? The next question we all need to understand is, do we have enough full-time employees during the covered period? There's an average number of full-time employees you needed to have and met the criteria in order to qualify for forgiveness. So again, we're in the spreadsheet here. What I did is I just built another tab to calculate that information. I try to make this easy on you. And in this tab, what I did was basically just said, hey, why don't you pull some weekly payroll reports from this date range? Again, that date range is calculated from the upcome page. Any individual who exceeded $19,023 in that week just reduce their salary down to $19,023. You don't take them out completely, but you can't qualify for, an individual can't qualify for more than $1,923 on a weekly basis. So if you have a payroll report, just make sure you make those adjustments as you plug the information in here. Below here, down here in this area here, we also need to know the average number of weekly employees you had when you did your PPP loan. Part of that loan application is you had to fill out what was the number of employees that you had on staff during your qualifying period. We just need to know what that number is so we can run the average and make sure that you're qualified that way. So that's an easy number that you can grab. And then lastly is we just want to take those payroll reports and we want to plug in totals for each of the pay periods. Again, I just want to kind of show you how this works. The way this spreadsheet is built, if you're running 8 weeks, I'm going to only show you 8 lines. If I run 24 weeks, and I go back to this, it's going to show me all 24 lines. So I try to keep it as easy as possible, as obvious as possible. So just fill out the items that are yellow. Don't fill out any items that are gray. And some of these things are already filled in. So go along with that. It also is telling you the beginning and end of the payroll week. If this number is off by a few days, that's when you go to this key input and change it to be whatever that day is. Based on that date, it's going to recalculate all these items, and then it'll be based on those pay periods. So this is the first day of the pay period to last day of the, first day of pay period to last day of the pay period on a weekly basis. If you're running a 2-week pay period, you're going to have to break it out week by week. But you need to do full-time employee averages based on the week. So we need the number of full-time employees on a weekly basis. So that's why we're breaking out this way. Real simply, what we're going to do when we fill out this form is we're just going to take the information from our payroll report, and we're going to fill in the totals for each of the items here. As well as the number of employees on a weekly basis. And if it's the same week after week, it's same week to week, you can grab this bottom right-hand corner and drag it down, and it'll fill out that same number. So it's an easy way to autofill if you have something that's consistent. In this case, this person also had 9 employees before. Actually, let's make it 12 so we can see it slightly offset the average there. They had 12 people when they filled the application, but during this covered period, they only carried 10 full-time employees. So what we're getting here now is really a total calculation of what the full-time employee average is. And that's giving us that number right here. Employee average is 10 on a weekly basis. We can now compare, when we run our calculation, how we did on our average going in and going out. Obviously, if this person had 12 and we now have 8, there's going to be a lower percentage. And we'll see that later in the calculation. I also, on the same sheet, to not kind of build the thing up, is to put in some of these expense items that are also allow you to qualify. Jason, you're probably more familiar with some of these expense items than me. We made a specific list of what does qualify. Are there anything else that would qualify besides the items we listed below here?
I would say that it's a bit unclear in some ways. Like, and I would caution anyone, like, let's not get too creative here. But it was really clear: rent, utilities, things along those lines. And then you can see down below employer contributions for health insurance and retirement plans. And then interestingly, like, the federal taxes are not a part of this. So employer paid federal taxes, but state and local taxes are. So, definitely want to capture as much as you can there. And my advice would be to focus a lot more on the payroll side of things, and then take a look. Transportation could be one where you're looking at, Uber rides. Is that transportation? Is that going to? It should, but the question really is, like, where do you want to draw that line? So again, I think the payroll side of things and health insurance and retirement plans, those are safe bets. Rent, utilities, internet, phone, those are all safe bets, or not even bets. Those are all safe to use. I wouldn't try to be too creative in that space.
Yeah, and we're going to guess that do it conservative. If you've qualified, you're good. You don't have to worry about it. If you are trying to look through a few more dollars here and there, you could probably talk to your CPA and figure out what other people are doing to add to it. But when you're doing this calculation, you're trying to make business decisions right now of what you should do moving forward with your company. And we don't want to trick the system too much. We actually want to have some visibility, so we're making smart decisions while we still have time left to qualify for your loan, as well as time available to start restructuring companies if necessary. So those are the decision points we need to make right now. When it actually comes time to filling out that application, you can get into that nitty gritty with your CPA or with us if we're working with you at that point. So we filled out this information. I do want to point out for clarity, if don't include the taxes when you're running these totals, because the federal do not qualify. So you don't want to have those numbers in here. And you just fill in the state items over here. It's easier to kind of just put one lump chunk, one big item out there. You don't have to do it person by person. Our goal here.
I could just make one statement there, though.
Yeah, sure.
When you say don't include the federal, it's the federal's taxes that you pay as an employer. So as an employee, you're looking at gross wages for that employee and all of those wages, whether it's a transportation tax that might be deducted from their check or Medicare, whatever. That's all, whatever their gross wages are, that's what you want to have in column D there.
Oh, that's a great clarifier there. We should probably even change this to gross.
Yeah, gross wages. Yeah.
It's not going to, I updated on this sheet. It's not going to update on your sheet because you made a copy of it. But just for clarity, you're grabbing the employee's gross wages for that item. So those are the items that we needed to plug in order to start doing the calculation. Hopefully that seemed pretty easy for you. I kind of worked to add some of the intelligence into the sheet so it follows the lead. I'll say it is Google Sheets. You can easily break it. If you break it, just contact us. We'll help you put it back together. There are some variables that are running the entire sheet. There can obviously be issues, but for most of us, it's going to be very easy. If you plug along the information as it goes, and you have clarity of what that information is, you should get some pretty good calculations. What all this leads to is this final calculation page here. And the final calculation page, there's nothing else to add to the sheet. I'm just looking through each of the line items, adding them together and adding some logic to which items qualify or not. I want to see what the reduction value is and how things work. So you can see here the total payroll costs during this covered period is $84,000. The other items were $200,000. So the eligible costs for this company is $105,000. If you remember in their initial application, it was a $100,000 application. So dollars wise, they qualified for the program. Congratulations. But that's not the only thing you had to qualify dollars. You also had to qualify with full-time headcount. Here they had 12 people when they applied. During this pay period, they only had 10 people. So they're running at 83%. That still qualifies. Jason, what's a tipping point? 75%, right? That's you have to be at 75% or more in order to
of their wages. That's right. So you can't reduce someone's wages by more than 25% and have those wages qualify under the forgiveness plan.
What about the full-time employee headcount?
It's a 1-to-1. You have to maintain the same number headcount for the for your application.
So in this case, at 83%, they qualified in dollars, but they didn't qualify in number of bodies. So their forgiveness amount will be offset slightly by that, by the difference here. And that's what these calculations are doing below. It's actually running 3 different scenarios to determine what's the lowest of the 3, and it chooses the lowest of the 3. Because they're running at 83%, they didn't qualify for their loan amount, which is 100. They only qualified for 88,000 of it because they had 12 employees. When they filed for the application, they only kept 10 on as they go along. Still a lot of forgiveness. $12,000 payback is very easy to pay back over a 3-year period. There's no problem there. You'll also see that after that is calculated, if they did take that EIDL advance, that money also has to be paid back from the PPP. So really their final forgiveness amount here is $78,000. Again, a very good job, a very great way of qualifying, but that's how this information flows. If I were advising this company right now and I saw those dollars, I would definitely not go for 24 weeks. I would not spend 16 more weeks of payroll to try to capture $12,000 over a 3-year period at 1% interest. It doesn't make any sense business-wise. This person has qualified for plenty of forgiveness. The goal, it doesn't have to be 100% to be the winning key. So what they're looking for really, I guess it's 21,000 with their EIDL money. But of course, if you have EIDL money, that's where you're gonna get that money from. So that's running through the scenarios one time. I hope that was helpful to you to kind of see what's there. And I think now we kind of like just want to go to questions and answers, because there's probably a lot of questions you're going to have now that you have this tool and can see some of these questions. What are the repercussions for what's happening? Is that you, Joel? Are you queuing up the questions?
I am. Yeah, I've got a whole bunch here. I'm going to kind of copy and paste them. But I noticed there are also a couple questions in the Q&A as well. So Tim, Jason, be sure to check those. Did either of you guys see the one here from Shira that was asking, you guys say don't count owner, but what if the owner gets a W-2 salary?
Yeah, the definitely count owner if they're receiving a W-2. So there are some special rules around owner. So specifically, you can't, if you made $60,000 a year in 2019, and then all of a sudden you got PPP and you increased your salary to the maximum, you're going to impact your forgiveness in that situation. But what we're counting as the head count would be the number of W-2 individuals.
Yeah, and to be clear, Joel, I didn't say don't count the owner. I just want you to mark the owner. Which of these employees, W-2 employees, are owners and which ones aren't? Because the owners have some limitations of what they can do. They can't have given themselves a greater raise with PPP money, as Jason pointed out. So they're going to have to maintain some average, and we need to designate that for future use.
And then what about Bill's question here? He's asking for a bit of a recap on the headcount period comparisons. He says it's based on Q4 of 2019 or Q1 of 2020 compared to the covered period, right? Not just any reduction during the covered period.
I would say, well, go ahead, Tim.
No, go ahead.
Yeah, I was going to say there's 2 testing periods that were part of the original PPP program that determined headcount. The first one was Jan 1, 2020 through February 28th. And then the other period that you can use is, I believe it's February 1st, 2019 through June 30th, 2019. Have to double check those dates. But so you can use either one of those periods as your determination for headcount. But the bottom line is, what did you put on your application? We all remember the application from for the SBA. It was like 3 questions, right? What was your payroll, times it by 2.5, and what was your headcount? That's the real thing you have to contend with.
Well,
and for clarity, when you do the comparison, the question is, have you maintained your employees? So they're not looking at the maintenance from 2019 numbers. They want to know from the previous quarter, if you had 12 employees going into the PPP covered period, did you maintain 12 employees? That's the question they're going to ask. That might have changed from originally in May when this stuff came out, or April and May when this stuff came out, to now, but they're definitely doing the comparison based on full-time employee headcount.
All right, here's sort of a high-level question that Katu asked here in the Q&A, and then I'll get over to the chat so we can, because there's a bunch of little specific questions. But Katu is asking, if we don't have payroll, meaning we collect income from pass-through income, I'm guessing that means they have like an LLC or an S Corp that just passes through. Does this payroll forgiveness application apply to us, or do we follow a different process for PPP EZ loan forgiveness?
That's a great question. If you received money for PPP, you should be running a payroll for yourself. You should have a payroll record, a W-2 payroll record for yourself, so that you can add your bodies into the head count as well as your dollars into the forgivable amount that's there. Usually as business owners, we don't want to run W-2 because we have the opportunity to take out those draws and save on some taxes by taking capital gains instead of income tax. For the purpose of qualifying for PPP, you definitely want to get the 100% forgiveness over the slight difference in tax advantage. So if you didn't run payrolls yet, why don't you call your CPA or bookkeeper and ask them if they can run a payroll period for you during the covered period and get that information categorized in your books properly. That's probably the best way to get around it. I think the second part of her question is that there might be some easy qualifying numbers that are coming out through Congress, and some of this or for some of us, we might have an easier way of getting around some of these solutions, but none of that's been passed yet. So we're going with the information we have now. And again, some of our motivation to do this earlier than we know this information is so you can make business decisions today and kind of get a structure of like, have you qualified? Did you have enough employees? Did things go well when you had the covered period? And now that it's over, what should you do? We want to make sure we did the timing now and then just keep you posted on items and give you a tool that would work and could be advanced as we find out more information.
Okay, here's a question. I'm going to go back a bit because there were quite a few questions that were coming out as you guys were going along. One from Adam. He was saying, for owners, is this on a cash or accrual basis? Because we were working in Q1 but didn't pay ourselves for that work until the money came in after PPP.
Yeah, great question. I mean, the reality is for anyone, it's expenses that were processed or paid during the covered period. So if you didn't pay yourself in Q1 and then then you're going to be, your potential for forgiveness is going to be impacted by that. You can't, well, and the reason is, the main reason for that is that what they're likely going to request to validate your PPP and your payroll is they're going to request payroll reports, your quarterly 941s that you file with the federal government. And so if they see a 941 for Q1 that has nothing for you as an owner, that's what they're going to go by. So if you waited until March 31st and processed a quarter's worth of payroll, cool. But if you didn't, there's going to be a red flag there.
And most likely you're not the only one that's going to deal with this. And there's going to be some changes or some documentation that come out to understand how to deal with that situation. Because many of us business owners don't take out regular paychecks through W-2.
Right.
So there's going to be ways of reconciling that. So don't just feel like you're at total loss, but that is one of those items that are still outstanding to be discerned.
All right, here's Jamie. Jamie asked this question: how should we track seat changes? Meaning we maintained headcount, but we had some people swaps.
Here, I'm just going to share my screen so you can see. I'm on this Payroll Qualifier tab. And you can see one way that we kind of programmed this thing is that you can put each individual person and their name. So Jason, Tim, Joel, blah, 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 blah. Jason.
By the way, I want to raise if
so we programmed this so that each person can be there. If the person worked in Q1, but didn't work in Q2, it's fine. They just would not have any information on the Q2 side. Or vice versa, if they not Q2, covered period. If they worked in Q1 but not in the covered period, you just wouldn't put any information in there. And then vice versa, if they worked during the covered period but not in Q1, we just take it out of there. The head count and the averages still work, so that's not a problem. The other way you can do it is you can actually just number it. So I had 10 employees. Here's what the average was there. Now I have 10 employees, and here's what the average is here. So you don't have to do it by name, whatever works best for you. The software will, the program will still run the calculations properly.
And here's sort of a related question for you guys. Bill asked in the Q&A here, are losses in headcount due to performance fires? Meaning, I'm guessing someone who was terminated for performance reasons. Are those counted differently than losses as layoffs or furloughs?
Unfortunately, no.
Yeah, it's the same. You have to maintain the head count. It was a stimulus package to keep people employed. So if you had an unfortunate situation, hopefully you recovered soon enough and got somebody in place. If not, think of it like this: the money you save by not paying that person is still sitting in your account, and it would just be paid back to the SBA. So it also wasn't an expense to you during that time. So think of it that way. You received money and you didn't have an expense against it.
Now,
Right.
Manwai's question might also dovetail into this, because he said one staff resigned on May 8 voluntarily due to personal reasons, and also her OPT expired. In this case, is she exempted?
I don't believe so. I would ask, we can look into that more. If that is going to have a major impact on you, then let's definitely look into that more. And that might be a good reason to do a one-on-one engagement to work through some of these finer details. Another thing you can do is kind of wait for more information to come out and talk to your CPA and get some of those items. I'm going to guess that some of this stuff might not have a big impact on some companies and not others. And you're going to have to decide what that impact amount is. Do yourself a favor, walk through the qualifying calculation first to see if you qualify as is, and decide at that point if you need to get into deeper concerns or questions, or if you just did good enough with the information that you have at hand.
Yeah, and I think one thing to say on that front is, like, remember the intention of the program from its onset. It was to keep people employed. So if someone leaves, and regardless of the reason, and your head count goes down, the idea from the program's perspective, as best as we can determine, is, well, you had someone doing their job and they resigned for personal reasons. You need to hire someone else in order to do whatever it is that they were doing before they left. So that's likely how I think things will shake down.
So I just realized this question that Katu had asked earlier about pass-through and based on the type of entity that they're running at Resonate, it actually ties into a question that I missed from Priscilla. So sorry about that, Priscilla. She was asking, if you're a solo entrepreneur, which I guess means a sole proprietor, is my guess what you mean by that, is 100% of your wages forgiven? And then someone chimed in here, Stephanie did. She said, great question, Priscilla. That would be me. And I'm fairly confused here, not sure where to start. I'm a freelance journalist / producer.
Yeah, there are different qualifiers for the solopreneur. The reason we didn't get into that detail is some of the information that might come out from Congress is just going to take care of that situation completely and be forgiven. So we didn't need to necessarily dive into those details without knowing what that information is. If you're a solopreneur, you don't have to make some of the harder decisions that some business owners have to make, which is that PPP got them through an 8-week period. They don't have any more work to do, and they might have to let employees go. One thing I want them to understand is if they have money sitting in their checking account or their savings account from PPP and they've already qualified, I personally would want them to retain that cash. As harsh as that might sound, it's better to be viable as a business and be able to maintain employment for the employees that you need for a longer period of time than to burn all that cash and not have something as a safety net in the future. So those are the items that we're seeing that are kind of crushing some business owners right now. And we wanted to make sure we gave them a tool to make those decisions. Some of these other ones, I think, will work out in time.
Jay, do you want to add anything to that? I'm going to take that as a no. Okay, let me get to a question here that's really simple that Jamie had asked. What about business credit card interest? Does it qualify, or is it only mortgage interest? I think I know the answer, but it's above my pay grade just a tad.
You can answer that one, Joel. You already know the answer to that one.
I'm going to say no.
You got it.
Okay.
Yep.
Okay. Well, you give me more credit than I deserve.
And by the way, that would be business mortgage interest. By the way, not
right, not home.
personal.
Yes. Okay. Here's a question from Lou, Mr. Schwing. How are you, sir? What if you are keeping all the employees through the entire 24 weeks anyway? I don't intend to let anyone go.
If you qualified in 8 weeks, don't do the extra work. If you need the 24 weeks and you're not going to change anybody and that helps you, sure, go for it. The calculation, the pages that we built can calculate it both ways. So you can run through 2 scenarios. My thought is like, just make it easier on yourself. If you qualified, the money is yours. The money that's sitting in the savings account is yours. It's available to you. My encouragement is if you qualified in 8 weeks, don't keep people around for 24 weeks if you don't need them. And Lou, I know your situation, you're going to keep people around no matter what. But there are some people I would think that it's not good to retain employees during some of the seasons that they're going through. And we want to make those decisions sooner than later so they stay and maintain healthy as they take on the runway they need to get themselves back on their feet.
So here's a related question about expenses and which qualify. This one's from Scott. What's up, Mr. Matz? For the P&L report, there are so many significant monthly expenses that could fall into the other beyond typical office utilities like Adobe Creative Suite, Google Suite, et cetera. Do you suggest that we include all? And he said, this is amazing. The worksheet, by the way, he and Priscilla both said that. So thanks for that.
Oh, you're welcome. Yeah, it was fun to make. I'll say I didn't sleep very much last night because I was putting some finishing touches on it. I really, truly am an Excel or spreadsheet geek. I speak in the spreadsheet language better than anything else. But it was fun adding some of these little features where you chose certain items and then it would feed you the next. I just thought it would be easier than some of the spreadsheets I got originally, which were long paragraph descriptions of should I do this and should I do not. I figured I'd just add the intelligence into it. So I'm glad it works for you. Hopefully it kind of feeds you that way. To answer your other question, the other category, I would be very careful. I'd go with what Jason's original thought here is. There's no reason to push it if you've already qualified with the expenses you have. If it does kind of get you over the edge, fine. But you're probably looking at something in a few hundreds or a few thousands of dollars on money you got for free. So don't be afraid to not qualify at 100%. It was free money for whatever percentage you did qualify. And to give back whatever little pennies are left over instead of trying to kind of risk it, just be smart that way. There might be clarity in the long run with your CPA or what other people are doing in practice that would allow you to open up that other category. And if it matches what everyone else is doing, you can easily kind of plug into it. But for now, we just want you to make your business decisions more than try to kind of figure out what all fits within the barrel.
Okay, I know we're going to be running out of time here shortly, so I'm going to try and get through these final questions quickly.
Let me ask the one with Shoshana. I think you skipped it, but I do want to. Yep. There are some safe harbor requirements that are part of this program, and I actually chose to not include them. It might be very relevant for what you're going through, and it might be something you need to advance into. It wasn't worth programming it for the situations that people are in. You probably know the safe harbor requirements, and you can easily do that information yourself with the reports I already gave you. It is a Google sheet, just add cells to it. If you do need help with it, or you want to do something else, again, a good opportunity to do one of those one-on-one engagements with us. We can easily plug in something like that within the hour that we're going to work with you and get that information going. But yeah, so I saw a couple questions where I didn't include everything, and you're right. It wasn't necessary for what my agenda was today. We might reveal some other things in the future as we do those items.
Yeah, and this question from Creighton actually kind of ties into the question of employees and who qualifies. He said, how do I calculate headcount exemptions where I offered to hire back all of my employees, but some rejected the offer?
Yeah. Yeah, I think that's part of some of that safe haven stuff that's going to come out, Creighton. You might have to kind of look into the detail of what the information is, what those offerings are, and how to kind of work with people in those scenarios. The information that you have on hand is probably pretty key to making those decisions. And I would, again, like figure out if it's kind of how deep you need to go with it. But if there's something you can just call me and I can walk you through it. That helps. I know where you live.
So as we'll make sure we'll run over a few minutes here, but I want to get both Tim and Jason to weigh in on this question from Scott, because it gets to this question of optics, which I think is actually really interesting, because we all want to know what's the intent of the legislation and are we meeting that obligation in spirit. Scott's basically saying my lender's with a different bank. They hold my business accounts. Fortunately, we've been really busy. I haven't had to dip into 100% of the funds granted. So I withdrew 50%, plan to pull the other 50%. Are these optics not ideal for forgiveness? I think that's a really good sort of philosophical question.
Yeah, that's a good question. Jay, you want to take a run on it?
Yeah, sure. I'd say this program was, completely unprecedented when it rolled out. It rolled out in a couple of weeks, and they gave out $359 billion in less than 2 weeks or something. So a lot of the initial concerns, we even received an email from Chase Bank for a client that was like, you should open a separate account. You should create, all these entries that that help you manage this money, because nobody knew. It was unprecedented what might be coming. It seems really clear that things like optics are not really a concern. So separate accounts, so pulling money out in different or measured ways is pretty unnecessary. At the end of the day, what do your quarterly 941s show for your federal, tax filings for your payroll? What does your canceled check or payment for your rent look like? Those are going to be the questions that would likely be asked should there be a question. I think I would also just take an opportunity to say, there was a lot of news around a few bad apples that took really big loans at the onset of this program that triggered audits and things, or that will trigger audits at certain amounts. It seems like 2 million is the automatic audit at this point. I don't believe that at this point, every indication that we have, the SBA isn't going to be the one that reviews this data and determines your eligibility. It's going to be the financial institution that you receive your funding from. So they're going to basically, just like your application, they're going to review your data. They're going to rubber stamp it, send it on to the SBA, and the SBA is going to say, thank you very much.
That's right.
I wouldn't worry too much about the optics.
And I would keep, and I love that last point, because it really is it's the bank. The bank is going to have to qualify the money they got to the SBA. You have to qualify to the bank.
Right.
Whatever your banking relationship is, some of them are very easy. It's going to be very, very easy. And it's going to be simple tax forms you're going to fill out. That's our expectation.
Yeah, lots of banks are creating those online portals for that. They're not done yet. Again, we've only seen a few banks that or institutions that are actually accepting these. So,
well, with that, let me just mention everyone that if you're still having questions or if you want some hand-holding, I'll drop this link again that we shared earlier. This page is, if you're just like me and you're saying I could use some more hand-holding or get into the process and get into the specifics of it, we're happy to help with you'll see this option 2 here to help walk you through the application process, or option 3 if you want consulting for a month and really see how it all plugs into your big picture finances. That's there and available for you. Tim, what should people expect as they get into that?
Oh yeah, sure. I'm sorry, I didn't mean to interrupt you. I was asking, can you also just do me a favor and plug the information for the 7 Ingredients group here? If people are not part of 7 Ingredients Slack channel, I'm going to go from right now, I'm going to flip over to Slack, and I'll be available to answer questions via Slack as well in the Slack group. It's our 7 Ingredients group where small business owners are having conversations all the time. and sending us these kind of questions through the great and wonderful Slack way of doing it. So please feel free to kind of stay on and ask those questions over there as well. I'm happy to do it. And in perpetuity, if you're watching this video and you didn't get a chance to chat with us, you can just Slack us as you're watching it on replay. So I didn't mean to interrupt you. Some of our intention to build those unique programs, we really just reduced our rates down to make some simple one-on-one engagement. So you can ask us some questions. I'm happy to actually build and kind of keep on building this spreadsheet for you. I help fill that out for what your company's unique scenarios are. I get that there are many questions out there and some unique opportunities or needs that you have. And we didn't want to just leave you hanging. But specifically, I'm most curious and most concerned about those of you who are in a certain financial position and you need some oversight currently on your finances. For us to run through our factors method, to build you a cash flow, to get some understanding of where your expenses are going to go, to look at your sales pipeline, and give you a perspective in the next 8 to 12 weeks so that you can make solid decisions today. I feel it very, very, very important. I don't want you to burn through leftover PPP money or forgiven PPP money and not have money you need to run your business. So that's our key point, and that's why we wanted to kind of land on those last two consulting ideas. We really just want to come alongside you so you're healthy and strong and maintaining yourself through these strange transitions we're going through.
Well, Tim, thank you so much. Jason, thank you so much as well, you guys, for sharing the expertise in building this amazing calculator that it's just really helpful. Everyone here has been offering really cool feedback and giving lots of great comments and expressing their gratitude. So Jay, thanks for being part of this. And Tim, thanks for being part of this. Please give us a final comment and then I'll wrap us up.
Again, I'm very pleased to be doing this. As little sleep as I got last night, I actually really enjoyed it. I had all of you in my mind when I was making it. I was walking through scenarios of the list of people that I knew on this list to make sure I had the questions answered for you. So hopefully we got those marked. If you find this very helpful, you can share this with others. We don't mind that at all. Right. Just give us some grace, give us some love, and tell them how much you enjoy the stuff that we're doing. You can join us in our 7 ingredients group and kind of keep the conversation going that way. We just appreciate you, and we do exist so you can thrive in business, life, and career. So everything we can do, we do it for you in that way.
Jay, give us your final parting thought, and then I'll send this off.
Final parting thoughts. Guys, it's just an honor and privilege to be a part of this community and to serve you guys. I truly believe that. And I joke with one CPA, if PPP is a $659 billion program. If they only understood how much time everyone in the country and every owner was spending talking about it, we might have already spent that $659 billion. But it is an honor and a privilege to work with you guys and support you and serve you. And I can't thank you guys enough for joining us.
All right, everyone. Thanks for being a part of this. We do appreciate you and love this community. So as Tim suggested, we'll see a lot of you in the 7 Ingredients Slack channel. I posted the invitation up the chat a little bit. So feel free to take advantage of that. And we'll keep the conversation going over there. And for those of you that want to dive deeper into an engagement, we look forward to that. Thanks again, everyone. Until next time, this is Joel signing out. So everyone make it a great week.
Bye, guys.